If you keep finding yourself losing money in trading, or if your salary alone isn't enough to create the future you want, this video is for you. My trading book became a national bestseller in South Korea. I'm a NASDAQ columnist for investing.com, where I share insights with your global audience. Now I share my market view every day with more than 2,000 traders on Telegram and generate an average of $500,000 in profits each week. And that's why you can trust the methods and strategies I'm going to share with you today. Let me make this clear. Watching this video alone won't guarantee you the same results I've achieved as a professional trader. But what I can promise you is this. Traders who follow these methods the right way generated as much as $230,000 in just 1 month. Take Mr. White for example. He knew nothing about trading, but he was able to $15,000 in just 1 day. There was another trader, he used to lose all the time. This person went from losing every single time to making $10,000 in only 8 weeks. Many people believe that you have to be born with talent to trade well. But here's the thing, I had absolutely no talent for trading at all. I lost $300,000 and still spent another $120,000 chasing paid courses. I read over 1,000 books, but looking back, most of them were the wrong ones. The harder I studied, the more I lost. My routine was very harsh. Trade all night and studied the wrong strategies after work and lived on junk food. Before I knew it, my weight exploded 97 kilograms. Funny thing is, I started trading for one reason, money. And I ended up losing everything I had. Then it hit me. If what I did was $300,000, what if I did the opposite? Only after hitting rock bottom did my money losing patterns become crystal clear. I went all in on one position, got stopped out, and watched it rip my way right after. Price went down, I leveraged down. It went down again, I leveraged down harder. In the end, my account was empty, and my losses just kept piling up. I'd jump in before the candle closed, get stopped out by the wick again and again. I'd hold the position without checking the economic calendar and get liquidated in seconds. My charts were a mess, loaded with indicators I didn't even know the names of. I couldn't tell which one was telling me what. After that, everything became brutally simple. The mess was clear. Win at trading, reclaiming everything. This time, no group playbooks. I started documenting the exact setups, rules, and tools that actually paid me in the market. This wasn't about adding indicator, it was about deleting the countless ones I used. I kept just 2 Bollinger Band, 2 moving averages, and 2 simple lower indicators, nothing else. Every trade runs on just 6 indicators, period. I don't use price signal indicators or custom coded formulas. Looking back, I lost money for 3 simple reasons. I piled up indicators, couldn't trust them blindly, and bet big with zero risk management. Now everything feels light, clean, focused, finally in control. The real price action, once buried under indicators, finally came into focus. Let's get into it. When I say trading, I mean day trading. And yes, gurus like Warren Buffett are right about investing. But for people like us who have to pay off credit cards and loans every single month, that is the wrong playbook. I needed to generate money fast, so I chose day trading. Day trading means you close every position the same day. Most people can't handle holding losing positions. Day trading fixes that. I lost money holding positions for days, praying someday it'll go up, someday it'll go down. Pure hope torture. In futures, close every trade the same day and always withdraw profits to build cash flow. Day trading isn't right for every future contract. Do it where volume is heaviest and liquidity is the best. Personally, I stick to NASDAQ and Gold. The reason is simple. They have the deepest liquidity and are active 23 hours a day. When there's this much volume, it's practically impossible for any whale or institution to manipulate the price. That's why chart patterns and technical analysis are more reliable in these markets. Don't worry, you don't need to be an economist to trade. Even if you've never traded stocks or done chart analysis, you are fine. Just by spotting a few chart patterns and key levels, you can profit. You only need to master one thing on the chart, and I'm going to show you exactly what that is, so pay close attention. And I will even show you exactly how I take a position and take it myself step by step. I lost money by studying too much, ironically. So don't worry if you think you know nothing. When you look past price, profits get harder. Indicators and ticker clutter the chart. First step, clear the chart. Delete every unnecessary indicator. The best tool for this is Tradingview. You might ask, I trade on my broker's chart. Why use Tradingview? Simple. Brokers like Wanda and Forex.com have slightly different session start times and price fees. Compare those tiny differences on Tradingview and you will spot new setups. Broker charts are clunky with zero freedom to add or tweak indicator. Tradingview is the pro charting platform traders worldwide use, with every tool we need built in. Starting now, I will show you step by step how to set up only the essential indicator in Tradingview. Search Tradingview on Google, then click the top wizard to open the homepage. On the homepage, click Get Started, then click $0 sign up. Enter your email and password to create your account. Tradingview has paid plan. Start free. Upgrade once you're profitable. From Products, click Superchart to open this view, then click top right icon to see the chart list. You can pull up NASDAQ, Bitcoin, dollar yen, and stocks like Nvidia or Apple right there. Hit the plus button to add symbols and build your watch list here. Since we don't need to most of these, let's clear the list. Then hit plus and open indices. Now you will see global indices like NASDAQ all in one place. NASDAQ 100 isn't the whole NASDAQ, just the top 100 by market cap. On the right, you will see brokers providing quotes feed, choose Wanda, Forex.com, and more. This setup is your first step into real trading. I trade 9 markets, but beginners should master these 2 first. Stick with them and withdraw profits daily. So you need to know when NASDAQ moves. The market is open 23 hours. But you don't trade all 23. Most day traders say only trade after market opens. Some call it the cash open. But here is the important part. 3 times a day, you get a 4-hour window. 2 hours before the open and 2 hours after. This means prep before the open. That window hands you more than opportunity than any other time. The market opened 3 times Asia, Europe, and the US. The day traders like us get 3 shots all day. Here's the easy way on Tradingview. Click Indicators. Add FX market session. On the 1-hour chart, you will see Asia, Europe, and US session boxed, and volatility kicks in even before the open. No sign up, no website. Everything's right there on the chart. Look at this chart. A strong rally kicks in 1 hour before the open. Most beginners show up after move. Opportunity is gone. Same in Asia, Europe, and the US. No matter how busy you are, you've got 12 hours a day to profit from volatility. Each day has key windows where volume explodes and volatility peaks. Near 90% of profit happens in these windows. If you don't know them, you are missing the biggest opportunities. Here's the US session. It delivers 380 points before the open. Here's the Euro session. It delivers 150 points starting 1 hour after the open. Here is yesterday's US session. It delivered 180 points starting 1 hour before the open. The real profits go to those who trade before the open. Claim the time advantage, seize opportunities others miss, and take the high ground before the US Open. That's why, with just NASDAQ and Gold, I can profit all day. Next up, drawing tools on the left, visualize the chart. Now let's set them up to mark our view. We'll pull out only the tools we need, set them up exactly like mine. In the second section, add a horizontal line, a trend line, and a vertical line. In the third, and Fibonacci retracement. In the fourth, check price range. In the fifth, add a rectangle. Start them, and the toolbar pops up on screen. No more digging through menus. They are our core tools, the basic weapon for analysis and profit. Now, my tool playbook. When you're at the chart, you've got just two jobs. Mark yesterday's high and low. In futures, the daily candle starts at the Asia Open. So mark the Asia Open with a horizontal line. Beginners start with these three lines, nothing else. I send an alert whenever price touches these lines. Click the clock icon on the right. Under condition, select price and crushing. In value, enter your horizontal line level. Choose once or every time. When price breaks that level, you will get an alert. Truth is, the candle matters more than Fibonacci, trend lines, highs, or lows. It shows the true strengths of buyers and sellers. YouTube is packed with candlestick videos, dozens of patterns to memorize. Will memorizing every pattern make you money? The more you memorize, the messier it gets. For candles, this is all you need. I will mark the ones that matter right on the chart. I like 1 hour candles with wicks like this. A wrong lower wick means sellers push the price down, buyers drove it back up. Strong reversal signal. Conversely, a wrong upper wick means buyers push the price up, then sellers drove it back down. When these wick candles formed near key support or resistance, their reliability jumps. Top left, see the D? That's the daily. 1 candle per day. Click here the favorite, the time frames we'll use most. 1 minute, 5 minute, 1 hour, 4 hour, and daily. Enough to start. I'll draw a rectangle around yesterday's daily candle. Now let's switch to 1 hour chart. See it? Yesterday's single daily candle was 23 hourly candles, 1 each hour. Each small candle is 1 hour of price action. Switch to the 5 minute to break the day down further. What I just showed you is a mission, critical for trading. Why does it matter? For example, look at the 5 minute chart. It looks like strong uptrend. Most beginners chase this, buy here. But what happens next? A massive setup flips every buyer led. Why does that happen? Zoom out to 4 hours. There's your answer. That rally was a tiny bounce in a downtrend. That's the classic rookie trap. Chase a 5 minute bounce, get crushed by 4 hour downtrend. A well-trained trader reads multiple time frames at once, then makes the call. Your entry must align across time frames. Never fight the higher trend. Read the trend on the higher time frame. Enter on the lower. Stay aligned. So how do you read trend direction the right way? Markets move 3 ways: up, down, or sideways. First, an uptrend, higher highs and higher lows. Longs have the edge. In an uptrend, go wrong on pullbacks, higher lows, or breakouts. A downtrend is the opposite. Lower highs and lower lows. In the trend, shorts beat counter trend runs. In a downtrend, short the pullback rally or the breakdown. Sometimes that pullback is the bottom, where traders lose money. Here is how to avoid it. Bottom with a wrong lower wick, or on a key demand zone, that's not downtrend continuation. Sometimes it is still pushes lower. But the higher time frames usually shows clear clues if the downtrend will continue. That's why even with a 5 minute entry, you should check 1 hour and 4 hour chart. Lastly, a range-bound market. No clear trend, price bounce inside a box. Simple. In a range, you can open exit green either way. But if the trend doesn't follow through, and you don't exit, the trade drags on. Range tip: after 1 hour, move your stop to break even so you don't take a loss. Always seek better entries. Buy near the range low, sell near the range high. Build the habit. Profit in ranges or trends. Good entries keep you ahead either way. Perfect entry: news shakes you. Chart says sell. Headlines scream bullish. Now what? I ignore news, earnings, and PE. I only check the economic calendar. Because in day trading, the real-time chart signal is most accurate. I focus on technicals. The only fundamentals I use are calendar release times. Here's how you check release. Use the economic calendar on investing.com. I will drop the link in the description. Check our release times there. You will see 1-star, 2-star, and 3-star events. Focus on 3-star release. Watch how a 3-star release moves price. This day had one. Right after the release, the entire index plunged 200 points in seconds. Even a $1,000 short could have made $8,000, an 8 times return. Before a release, holding a position is gambling. Get it wrong and you lose. Even if a technical analysis shows a high probability buy entry, price movement after an economic indicator release is unpredictable. Beginners should not hold positions into these events. What is technical analysis? Trading using only chart patterns and price movement. I ignore economic news and earnings. I trade 100% on technical analysis. You might ask, if fundamental analysis is powerful, why do I focus only on technical analysis? Let me break this down. Here's why. The weather forecast says high waves today. You take your board to the beach, but the sea is flat. No waves to ride, but no forecast. You hit the beach, perfect waves there. So you surf. Because what's happening right in front of you is real. But what if the forecast calls for a typhoon warning at 2 p.m.? Even with perfect waves right now, you don't paddle out too far. Just like checking the economic calendar, be cautious during periods when high volatility is expected. Fundamental analysis is someone else's prediction. Say they'll beat earnings, and the market can do the opposite. Technical analysis is what I verified myself. I read the chart like the ocean and see which way the wave is breaking with my own eyes. In day trading, what should you trust? The chart right in front of you. Someone might say, we'll rally today, but if price is falling, that's reality. Forecasts are just a reference. Surfing is about the wave in front of you. Fundamental analysis flags volatility, but nobody knows which wave will hit. That's why we focus on technical analysis, reading the real wave on the chart. Remember when we covered support and resistance during uptrends and downtrends? Watch this. Price falls to break the high, reject at resistance. That's where many dump their runs or ride the new short wave. Bottom line, there is a sharp spot most traders agree on, the entry. At the next high, the same resistance zone rejects price again. Same thing again. When price hits this zone, they start selling. So when price revisits this zone, the odds favor sellers again. So the call is obvious, sell here. But that idea alone won't make you money. Turn into a real trade plan. The two essentials: where to place your stop loss and where to take profit. You can short here. Most traders place the stop loss just above this resistance zone, but I don't do that. I only stop out at a level where I take the opposite trade. For example, if I short the previous high, I only exit when a new long setup appears. Then I either close the short, reverse into a long, or stand aside. If I'm short, most traders target take profit as support, where buyers stepped in. But I don't do that. If I'm short, every hour I trade my stop to 50% between my entry and the lowest row. So I don't cut a winner by hand. Now we've got entry, stop, and take profit marked. But it's still just a plan. We need to turn this feature into real money. You need two terms, lot and point. A lot is the NASDAQ Gold contract unit, 0.112 etc. A point is 1 unit of price movement. Profit per point scales with your lot. For reference, at 1 to 1000 leverage, opening one lot requires only about $23 in margin. Leverage is borrowed buying power from your broker. Many say it's dangerous. I still use 1 to 500, even 1 to 1000. Because when I put $10 on NASDAQ, my max loss is $10, but the upside is unlimited. You are thinking, what if I lose more than my $10? That's why you must trade with a broker that offers negative balance protection. You can only lose what you deposit. Some brokers will charge you for losses beyond your deposit. So choose a broker that limits losses to your deposit, period. I will list those brokers in the description below. Let's get back to lot and point. For example, if NASDAQ moves from 15,000 to 15,001, that's 1 point. We entered on a 5-minute inverted hammer near the previous high. Enter one lot at 23,680, stop at 23,730, risk $50. That day's trade plan was simple. Hold until the US close, unless the stop or break-even stop hits. Result? Following this plan would have generated $430 in profit. With $50 at risk, $430 in profit, roughly 9 times your risk. We kept risk at $50, upside left to the market. Even after 5 or 6 consecutive stop losses, one take profit can cover every loss and still leave you ahead. Most traders ignore this simple math. Hold past stops, then a massive counter trend wipes them out. You won't win every trade, but size your loss, cap risk on entry, and you will never get blown out of this market. Over 90% of losing traders ignore this basic rule. Want to see what happens when you stick to this simple rule? Let's say we take this with 10 lots on NASDAQ. That's about $230 in margin. You could earn over $4,300 in hours. No fancy tricks, just our core rules. Last week, with this method, I booked $360,000 in profit live on Telegram with 2,000 watching. Simple, powerful, repeatable. Feels ready, right? But start trading now, and you will repeat my past mistakes. My deadest mistake, jumping in with no rules when I thought I knew it all. I made money briefly, but those profits vanished overnight. My account was completely wiped out. The rules I'm about to share were forged in the market by losing hundreds of thousands of dollars, not taught by anyone. Follow these rules and you will build wealth, the safest, most enjoyable path in the market. You need to burn these 4 rules into your brain first. First, string loss control, including leverage. This is deciding how many lots to enter relative to your capital. I used to place oversized bet with no plan. Chasing big money on tiny margin, I cranked leverage and size. Trade like that and you might make money fast, then lose little faster. In as little as 10 minutes, you can lose over $10,000. So my rule number 1 is simple. Never risk over 10% of the account on one trade. Keep the 10% rule and even 10 consecutive 10% stop losses. 10 you out, you still have about 35% left. I never knew this back then. Without a loss scenario, my account never stood a chance. Second, don't trust people. Trust the chart. I used copy headlines. If a famous name bought, I bought. Sometimes they end up right long term after brutal drawdowns. In markets, price action is the only thing you can trust. Who bought what shows up on the chart anyway. It's either priced in early or priced in later. with the move. Charts and technical tools are your compass. But spraying indicators everywhere is the fastest way to blow an account. Master a few core tools, moving average, Bollinger Bands, support and resistance. Stop chasing a shiny new strategies. Dig one where deeply. I use 2 Bollinger Band. I built this method first, and a Japanese YouTuber copied my book, so it's better tested. Here is the simple setup and how to use it. Set one Bollinger Band to 44 with the open. Set the second to default 22 with the close. If price steps on and closes beyond the both bands, that's our entry trigger. When price closes through both, I call it a double B. Moving average help decide direction, long or short. I only use 2, the 20 and the 120. If the 20 and 120 are aligned bullish and price closes a double B at the lower band, I go long. Conversely, if they are aligned bearish and price closes a double B at the upper band, I go short. Even without a double B or close on the 4-4 open setting, the 1B can be a long or a short. I've made tens of millions of dollars with the double B method. Do me a favor, hit subscribe first. I will drop the full method in the next video, and if after a few months it doesn't hold up, unsubscribe anytime. Third, trading is a muscle. You do not skip a single day. Like athletes train daily, traders study chart daily. Even on weekends, I review and plan the next week. Trade daily and crazy things happen. Patterns you couldn't see start popping out and entries reveal themselves. You look at the chart and your body says now before your brain does. That's a muscle memory built from reps. Your finger moves before you think. Entries and exits hit perfect timing. Trade 100 times and you will see 100 situations. At 1000, almost nothing letters you. That's the power of experience. On this channel, I share only what I learned in the market. No book theories, no rumor mill stories. If I haven't verified it with real money, I won't post it. So you will hear many things here for the first time because it's 100% from my experience. First, learn long BS. Longs bet on rising market, shorts bet on falling markets. Bottom line, your long exposure should dominate your short. What does that mean? Markets have a long-term upward bias. Simply put, currencies debate in complex terms. There are many forces. I don't care about the complex reasons. You think it's just because I trade NASDAQ? No. Think gold, Bitcoin, even your home price. Most inflation hedging assets trend up over time. Foreign exchange is an exception. Buying US dollars with Japanese yen, dollar yen, trends up long term. Buying foreign currencies with dollars like euro dollar trends down long term. Because the United States reads period. This isn't about single symbols. It's capitalism structure across the assets. That doesn't mean shorts are useless. In strong downtrends, shorting is your main weapon. We just bet more open where the odds are higher. In heavy short BS, I enter half size or even a quarter of the plan. Even heavy long BS, I took full size or boost to 1.5 times. Since adapting this, my trading became simpler and clear. It's the fastest path to real money. Now you know rules, the losing 99% done. How do we place orders and set instant stop loss and planned levels? Let's work through MT5. Tradingview is the best analysis tool for precision charting worldwide. MT5 is best execution tool for fast, accurate orders. Use the best tool for each job combined. Let's install the execution tool. Search MetaTrader 5 in your phone, App Store, and install. Open the app. You will see the account setup screen. To trade, you must open an account with a broker that loads orders to the market. When choosing a broker, verify the license and low system errors. I switch brokers when better conditions appear. To avoid ads, I'll hide broker names in this video. My current broker's NASDAQ Unable option and fee discount links are in the description. Once you're logged in, tap Costs at bottom left and add our main symbol, NASDAQ. Let's place a live NASDAQ order. Tap the symbol you will trade, then hit New Order. Market execution is the simplest. Buy now at the current price. At first, I used only that button. Then, I chased the highs and Phoenix sold lows over and over. To stop that, we run pending orders. A limit says trade at a better price than now. A buy limit means do not chase. If price dips to my support, buy automatically there. A sell limit means instead of shorting now, short automatically when price rallies to my level. Buy stop means break key resistance and keep rising, buying into that momentum. A sell stop means break key support and keep dropping, enter short with the breakdown. Master these three order types and you control fear and haste. No 24/7 screen watching. Even while you sleep, the market executes your plan. Below, you can choose how many lots to enter. There are two ways to size positions. First, sync one-to-one with the price movement, then scale leverage and lots. Second, sync your lot size one-to-one with current market volatility. I use both. Back then, I typed big numbers without knowing what they meant. Result? NASDAQ moves just 1% and my account halved. Nightmare. Beginners cannot absorb raw market volatility. Step 1 is sync market movement perfectly with your account movements. Here's my dead simple lot size method. When NASDAQ moves 1%, your account moves exactly 1%. On NASDAQ, 1 lot equals $1 per point. With NASDAQ near 20,000 points, 1 lot's notional is about $20,000. Your number may differ depending on when you watch. If you have $20,000, entering 1 lot gives you 1-to-1 sync. You do not need that much to start. Just reduce the lot size. If your account is $5,000, divide $5,000 by $20,000. Enter about 0.4 loss for the same 1-to-1 sync. Let's set example targets and stops on this chart. The stop loss is 30 points. The take profit is 150 points. With 0.4 loss, the stop loss is minus $12. The take profit is about plus $60. Once scared, you can scale this 10 or 20 times. At 20 lots, you risk 600 to target 3,000, but only after every rule is ingrained like muscle. Follow the sync method and wide swing won't hijack your emotions. I'll show you how to set targets and stops in MT5. A stop loss and take profit block emotional trades before they start. Since we are taking a short, enter minus 150 points from current price in the TP field and plus 30 points from current price in the SF field. Now everything is set. Press sell. We've just executed the first trade. All that's left is to watch the plan play out in the market. So what happened? In 4 hours, it hit 150 points. If we sold only out of emotion, we would have missed it. Alright. You just took your first real step in trading. Please execute everything you run today as soon as possible. And understand this is a process, not an overnight miracle. Remember this, log in now. This is no get rich overnight path. There's only a way to profit faster. So focus on speed read, chart faster, spot patterns faster, build trading muscle faster. Your only job is to initialize the entire process. Choose your hours, define your entry pattern, set risk per trade. That's it. What I did today is only 30% of this process. The other 70% is your hunger and execution.